everybody. Welcome to the Market Update. I'm your host, Bill Noble. If you need a roadmap in crypto and you need to make money in crypto, subscribe to this channel. Turn on the alerts bell so you know when we're going live. And most importantly, if you like the content, hit the like button. Anyone can use Token Metrics to invest like the experts. We use AI and machine learning to analyze the crypto market and find the few coins likely to gain the most. Tools on the Token Metrics platform include rolling daily ratings and price predictions for over 6,000 coins, daily, weekly, and monthly crypto portfolios, long and short-term trade indicators, and more. Think of us as a modern Bloomberg terminal for the crypto market. Sign up to gain valuable market data and professional analysis. So for today, we're going to begin like a week-long series about how to trade the upcoming Fed meeting. So the Fed will be making an announcement about what they want to do about rates, the pace that they're going to do rates, blah, blah, blah. Okay, it's usually a very complicated time for legacy, and probably this is the most complicated environment that I've ever seen. Right? Because the nature of the problems are so strange and the nature of the solutions that central banks have are very, very unclear. So let's talk about how to do the Fed trade. Okay. Best news of all, yay, is Ethereum is holding up the whole market. Right? Now you are paying $1,000 in gas to do a trade, but as everyone exits from alts, it's providing an additional bid to Ethereum. And on this weekly chart, Ethereum's holding in the 2,700 area. So that's good. Now, my Gann work shows that if ETH goes to 2920, okay, and fails, that would be bad. But for the moment, ETH is holding up the market and blue chip NFTs are holding up the market. So fingers crossed, at least as it comes to Bitcoin and ETH. Now let's talk about the dollar. The dollar has gone up, you know that. The dollar index has gone up, you know that. The dollar index will probably continue to go up, you know that. This is UUP. It's an ETF in the stock market that you could trade that follows the dollar index. Now, one thing that you'll note in the top right corner is that the DeMARK work on this is just starting to it's just getting going, right? This is a weekly chart, all right? And there could be 5 more up weeks in the dollar. 5 more up weeks. Now, how big those up weeks are, we don't know. But, the Fed has to face the fact that if they come out and they talk what they call hawkish, like they talk like they're going to really raise interest rates, that could cause the dollar to explode higher, which means dollar up, all other currencies down, right? And that includes altcoins. So the dollar is scary, and you found out over the weekend what happens to altcoins after you get a dollar rally. Now let's talk about bonds, particularly longer-term bonds. So the Fed will adjust rates. They'll talk about it. I will talk about it. Are they hawkish? How many times will they raise rates? It'll go on and on and on. My opinion is when they're done, the net is the Fed hasn't done enough or can't do enough to stop inflation. That is going to cause the price of long-term bonds to flat out crash. Okay, another negative for altcoins. So the interest rate for the 30-year bond, right? So price down, rates up. That's how the math works. The interest rate on the 30-year bond, which I tell you to think of like that's how the 30-year mortgage rate gets set. We're approaching kind of the crypto bear box where the 30-year bond was during the crypto bear market. Okay, so the higher interest rates go, long-term interest rates, because they're not controlled by the Fed. They're like the like button for the US government, right? Like YouTube, right? If bonds do okay, people are like, okay, Uncle Sam, we like it. But if bonds go down and rates go up, okay? So crypto is facing two threats this week and next week. The threats are much higher dollar or much higher long-term interest rates or both, believe it or not. So how the Fed talks about these things will determine how big of a threat things are to altcoins in the short term. Okay, this is another chart of another bond market product called TLT, which you can trade in the equity market. And as you can see with the DeMARK work, as we've talked about, DeMARK's work, a quant technical analyst, he'll count a certain set of conditions 1 through 9, meaning, the low is lower than the low yesterday, right? It's a little more complicated than that, but he'll count this certain set of conditions 9 times. Then there should be a snapback rally, and then there should be 13 down bars. Okay, right now, there's been about 7 of them. So there could be 6 more down bars in a long-term bond market product, which means most likely whatever the Fed does on Wednesday, long bonds may not like it. It may take them 2 days to figure it out, but I'm guessing long bonds won't like it. Now, to drive the point home about long bonds, this is long bond prices quarterly. So each bar is a quarter. The current bar ends in June, and there could be 3 more down quarters for bonds. That means long bonds may go on the US government for the whole rest of this year. So you better think about that, because that can really, really hurt speculative altcoins. Now, back to the good news. It looks like, according to Reuters, that everyone is flooding into Bitcoin. Bitcoin buying activity in the legacy futures market is very high. So it looks like people they don't believe in this negative chart formation for Bitcoin, which I threw up there. Rather, they believe that they will be safe in Bitcoin. Now, if you're trading Bitcoin or you're holding it, you're probably like, should I hold or should I get out? And here's how we're going to play it. We believe that people are going to buy Bitcoin and buy ETH because they think they're safe. So if there's a relief rally, those 2 instruments will probably hold. And if there's another huge puke in altcoins, they'll probably hold for the short term. So in order for true danger to reappear, people have to get the illusion of safety. So I told you a couple times that, people who like bear markets, they can be kind of mean. So the way the meanie guys will approach this is they're going to let everybody buy Bitcoin and Ethereum, and they're going to let them feel safe for anywhere from 5 days to 10 days. Okay. And then after they feel safe, okay, that's when, we're going to light the danger lamp again, because there is no safety in a bear market. All right. So, okay, it's good Bitcoin and Ethereum are holding. It's good people want to buy Bitcoin, right? Because they think Bitcoin is better than stocks and bonds. That's good. But there may be a big flush lower, like mid-May, sell in May and go away, right? So if you think you're safe, you might be for a little while, but complacency is your enemy. Now, one of the other reasons people are buying Bitcoin is they think, right, that the decline in stocks may be coming to an end. So in the top right corner is the ARK ETF in stocks. that is the altcoins of the stock market. And as you can see, it has completely disappeared, right? To the point where the person who runs this fund, Kathy Wood, is like, people are threatening to hurt her or getting threats because of the decline in her funds that invest in the altcoins of the stock market. And frankly, this ARK in the top right looks like Bitcoin ARK in the top left looks like Bitcoin from the bear market from 2018. Basically all the way up, all the way down. So the question is, are stocks the problem? And I don't think stocks are the problem anymore. I think the problems for crypto, if they exist in the currency market like the dollar and the bond market like long-term interest rates. All right. Stocks actually might wind up being okay. Now, that said, stocks may have 3 to 6 more down days. So if the Fed comes out and gets tough, there is a possibility of an additional puke in stocks. All right. But it's likely that there's going to be a relief rally in stocks at some point. Okay. That's why people are thinking, hey, like big tech stocks, everybody gave up, right? Bitcoin is holding up super well. So the way I would sum it up is that dollar interest rates, bad for crypto. Stocks, neutral for crypto, right? Stocks just kind of may, hold their own until the bond and currency thing gets really bad. So how is it going to work out for you and your altcoins? So let's start with Avalanche. Let's start with all the stuff that got killed over the weekend. This presentation is being done Monday, May 2nd. So Avalanche has gotten to the bottom end of its range, right? It's been traveling in a square box between 60 and 98, right? And I think it's reasonable to suspect that dip buyers are going to come in, right? And they're probably going to get 2 days of gratification. So altcoins will probably relieve the oversold condition by bouncing for 2 days. So they may bounce going into the Fed and they may rally after the Fed, but you have to be careful of the what? The failed rally, right? The failed rally, right? Failed rallies after the Fed means more pain in altcoins. Why? Well, because they may be done with the pain in stocks, and if bonds and the dollar are unfriendly, right, who gets beat up, right? Stocks that are already beat up, stocks that people want to hold, or highly speculative altcoins with nebulous value. So Avalanche, expect some sort of bounce, maybe 65, maybe 70, maybe. Okay, near. Okay, so this has been destroyed, and this is a high quality altcoin. So there was like a 15% rally over the weekend. And you may say 1 or 2 more days, right? Maybe the Fed comes out and everybody goes, oh my God, thank God the Fed's behind us no matter what they've said, right? But then you have to be careful of the failed rally after that, because if altcoins really turn down post-Fed, okay, that's when you'd probably be at short-term max fear in crypto, all right? So let's look at support and resistance levels that you can look at. Rewatch this video. We will be live soon, but I want you to have this right away. So as we've said in Bitcoin, 40,200 at the top end, 37,500 at the bottom end. Pretty boring. Most people holding Bitcoin will take boring versus what happened in, say, Fantom over the weekend. Okay, ETH, same thing. Kind of pulled up short of support, right? That makes me a little skeptical, right? Meaning, I wonder if they could try to press ETH one more time, right, after everyone gets done getting out of alts, but that's not near term. Bottom line is ETH is in a band between 29.70 and 26.70, roughly, right? Avalanche, It's oversold. If you use momentum indicators, it's way stretched out. Honestly, there's not much support until 50 in our minds, but that doesn't mean there can't be an oversold bounce. What it does mean is if there's a failed rally in altcoins after the Fed, you have to be careful, right? Saturday was not a full crypto-wide capitulation. It wasn't. And I don't even know that you've seen full capitulation in, say, S&P, right? Stocks may be a buy, like some of the indicators about like what they call the internals, like the number of stocks that are getting destroyed, it's getting extreme. But I don't think it's extreme for crypto, even though the price action is awful. And we all know that altcoins can go all the way up and then go all the way back down again. It's happened before. So you want to be careful. This is not to like hate on Avalanche, but you want to be careful about the failed rally after the Fed. Okay, Solana. The good news for Solana is that there's support at 81. Again, a little strange that they pulled up short of support. Normally, I like it when they go through support and come back. When they pull up short, it leads me to worry if they're going to actually, when they go test it, they're going to go through it. So the eventual downside target in Solana is probably below 70, but that may not be happening in the very short term, right? And if 81 holds, then maybe you got a week and a half, right? Big altcoins, if big altcoins don't stop going down, let's put it this way. If big altcoins don't stop going down, obviously there's zero hope for small altcoins. And as I've been saying for 2 weeks, if you're not adjusting risk and you haven't adjusted risk in small coins, you're risking getting completely wrecked. Okay, NEAR. The good news is NEAR is trying to come back above a key chart point at 1184. I can be more positive on this because they crushed the support point and now they're trying to come back above it. So if NEAR is above 1184, it's good. If it's not above 1184, then you're headed for single digits, 9.5. Okay, I think what happens here, because this is such a fundamentally sound coin, right, that was just subjected to a massive liquidation, right? If bulls come in and buy this, it could help at least cushion any Fed-related, blow to highly speculative assets, particularly in crypto, all right? So NEAR is going to be a really big leading indicator. Now, Fantom, oh my God, right? Fantom had support around 60 cents, did not get there. Interesting, right? Now, Fantom is obviously oversold, and it's obviously pretty stupid to get bearish Fantom after what happened. If anything, you've been paid to buy these destruction rallies in this coin, right? Not down to this level, all right? That said, the Fed is coming up. If the Fed wasn't coming up, you could do value investing in Fantom. But, man, if people try to buy the dip in this, and then Thursday or Friday of this week, they have to turn around and get out, that's going to be ugly. So you don't want to be bearish. And for short sellers out there, I don't know that you necessarily want to be short. You want to give it a solid 2 or 3 days and see if you get that, okay, everything is all right rally. I'm going to FOMO in and buy the dip, right? What are you afraid of here? Failed rallies and a new twist, the illusion of safety. The illusion of safety, right? Like I can buy this because it's down a lot, or I can buy this because it's not down a lot. Now, those ideas may work for 2 days or 3 days, or in the case of Bitcoin, maybe they work for 2 weeks, okay? But the illusion of safety feeds the bear, and the illusion of safety leads to total capitulation, because at the point where people go, oh my God, there's nowhere safe to go, that selling creates the end. Now, I've told you all that while leaving this Fantom chart up, Because if it can happen in Fantom, it can happen everywhere. It can happen to bonds, stocks, Bitcoin, Ethereum. Is that going to happen tomorrow? No. But you have to ask yourself, you have to look at your portfolio and go, if everything acts like this, if everything is going to act like this before it's over, can I tolerate that? I'll give you a hint. The answer is no, right? I'll step up my bearish meanie game, right? If there's a relief rally that fails, right, and everyone feels safe, the turn from there will be brutal. MATIC. Okay, now standing down from meanie mode, right? MATIC's got good support at $1.05, right? So, unless this is completely over and it's going to just die, then 105 should hold. So of all the things that I would say, oh, okay, well, you know what? This is where you might average down. 105 is a very interesting level. Because if 105 doesn't hold, well, if MATIC goes to 62 cents, where's the rest of the market going to be? Looking at stocks, 4103 is a key level in S&P Futures. So do stocks have another week of downside, or are they going to all go, oh, everything's fine, right? I got news for you. If the dollar goes up and long-term interest rates go up, stocks are not fine. But I don't think this is a stock market problem at the moment. Okay, GMT. Now, altcoins you may like. So GMT is currently making higher lows. That's good. There's a DeMARK 9 bottom. That's good. This may hold up. You can buy sneakers now with GMT. They've made the barriers to entry easier. So if anyone's going to buy anything, it may be this. Now, speaking of anybody buying anything, okay, ApeCoin has fit our description of not wanting to jump and FOMO into large trends or buy the first big, huge dip after a massive gain. So you can buy small dips, right? Like right here, okay? You can buy small dips on the way up. But once you get these big wicks and these double tops, man, when this thing goes down, it went through 1685. That was the 62% fib number, okay? So I'm not saying that there's anything wrong with ApeCoin. I'm just saying that if you were going to make the easy money in this, the easy money may have been made, okay? And then everyone else gets left holding the bag. Now, there is a 9 bottom here, but, ApeCoin's got to go back up. Otherwise, there's going to be more selling here. Now, I have not. Token Metrics AI had the call on ApeCoin, buying it at 18 and probably getting out around 23. Okay. But this is a theme, right? It has not paid to buy something after there's been a clear big trend and then a top. Okay. Crypto.com. Last week, we covered Coinbase's stock. Just can't cover it anymore because of the carnage. The carnage now has moved into Crypto.com. Okay, a cut in rewards news for their debit cards has caused people to just panic and unload the coin. Now, obviously, it's already gone down, but there's a DeMARK point here. Note the 13 bottoms in the middle, the upper middle, did not provide a bottom. There was a 9 bottom. There was a perfect counter trend rally. There was a little bit of a failure, and then boom. Okay, you're talking like 9 more. You're talking about like 36 hours of pain in Crypto.com. All right, this is one of the reasons why I think if there's an altcoin bounce, it's like 2 days, or they kind of buy it no matter what the Fed says, and then that's it, right? Because this is telling you about the rot that's happening in crypto, and frankly, even though some coins are down, right, there's a lot more rot to go. Remember, ARK is close. That's the altcoins of stocks. I mean, that stuff is close to back where it was in March of 2020. That's why people are like, hey, maybe we got to look at investing in some of this stuff. Whereas crypto is nowhere near where it was in March of 2020. All right. So let's sum it up. People are going to feel safe in Bitcoin and Ethereum. That's good. We expect that to continue. As soon as that ends, that's when the real panic starts. Speculative altcoins have probably got 2 to 3 days of upside or stability before you got to start making decisions as to whether or not you want to look at major drawdowns or take losses now. I'm going to hold it for the long term. I don't think is going to work unless you're talking about blue chip NFTs or Bitcoin and Ethereum. And even with blue chip NFTs, you're going to have to worry about hedging that at some point because it's denominated in ETH. So there are safe things in the short term. Okay. People are going to want to buy the dip in stocks. Altcoins should hold for 3 days. Okay. If there's a rise in the dollar and long bonds and everything starts to turn lower, that turn lower could look like what happened in Fantom over this past weekend. So avoid the illusion of safety. If you feel safe, you're not. Okay? You got to get comfortable feeling uncomfortable, because as soon as you feel safe, that's when the bears spring the trap. Okay? So that's the market update for today, Monday, May 2nd. This is Bill Noble. I'll see you tomorrow.